I owned that company largely because of John. I was the one who refinanced DPLO when John took it out of the Paladin orbit, and I owned it because of John Borshoff. I am no longer a shareholder of DPLO. I don't know anything about the corporate intrigue behind it. I just know that John isn't the type of person who would make a decision to retire overnight.
Yeah.
I don't know what happened, but I know what didn't happen.
Hello, everyone, and welcome to Find Exploration. Here we host commodity experts and company CEOs to give our audience a good foundation in their research and due diligence. Before I announce my guests, please take a few seconds of your time to read the disclaimer and, of course, to subscribe to our channel. My guest today is Rick Rule, founder of Rule Investment Media, legendary natural resource investor with over 5 decades of experience. Rick, thank you so much for joining me today.
Pleasure to be back with you. Thank you.
No, thank you, Rick. It's an honor to have you in my show. Let's start with the broad commodity questions. After that, we will switch to certain stocks. Let's start with gold. Gold, wild December ride. It has peaked to 4,400 before dropping to 4,100. There are many factors for that price action. Tell me, Rick, what's your take on the gold price action, and what's your take actually on gold? Is it overvalued as we speak, or this is maybe just a breather? Are we going further up? What's your take?
I think people need to have a perception check. The commodity that's missing from this discussion is time. If you look over 2 years, did gold fall from 44 to 41, or did it rise from 2 to 41?
Good point.
It's a matter of perspective. Volatility, which is what we just experienced, is something that commodity investors need to deal with, or else they need to find something sensible to do with their time and money. A bigger risk is cyclicality. I go back, as you can see from the frame, a very long time.
Yeah.
I remember the bull market in the 1970s. In that bull market, the gold price went from $35 to 850, a 30-fold rise. In the middle of that, in 1975, the gold price fell by half. Investors in gold need to be psychologically and financially prepared, never mind to endure 7 or 8% pullbacks, but to endure 15 or 20 or 30% pullbacks. And if they aren't prepared to deal with that, they're not investors. There's traders or speculators. It's okay if that's what you are. But if that's what you are, prepare your mind to do that. A speculator is never going to catch a 10-bagger because 10-baggers take time. And if your time constraints are 2 weeks or 3 weeks, you're not a speculator, you're not an investor, you're a trader. Orient your portfolio in that fashion. Now back to gold. Gold does well, historically, when investors and savers are concerned about the maintenance of their purchasing power in fiat-denominated instruments. Did the U.S. Treasury become substantially safer over the last 2 weeks? If so, then the gold decline was justified. Was there anything in U.S. domestic policy that made the U.S. Treasury safer and hence gold less safer? Of course not. We had a circumstance for a year where there were more buyers than sellers, and we had a circumstance for 2 or 3 weeks where there were more sellers than buyers. The value of gold. Let's talk in U.S. dollar terms. U.S. federal debt on balance sheet is reported now to have exceeded $38 trillion. Up $1 trillion in 3 months, the fastest rate of increase in U.S. on-balance sheet debt in history. The off-balance sheet liabilities of the U.S. government, Medicare, Medicaid, Social Security, stand at $120 trillion. That's a government number, by the way, not mine. Did those numbers go down in the last 2 weeks, to your knowledge? Did our Social Security obligations go down? Did enough people die?
Yeah.
Social Security benefit went down? Of course not.
No.
What changed was perception. I believe, which doesn't make it true, by the way, I believe that in the next 10 years, the US dollar loses 75% of its real purchasing power. That's happened before in my lifetime, the decade of the 1970s. I suspect, but I do not know, that over the next 10 years, that the nominal price of gold, which is to say the US dollar price of gold, or for that matter, the euro price of gold, or for that matter, the pound price of gold, probably mirrors the decline in the dollar. So I wouldn't be surprised to see the nominal price of gold over 10 years go up threefold or fourfold. I would be very surprised if in the next 10 years, at one point in time or another, the gold price, the nominal gold price, didn't decline by 20 or 25 or 30%. I would be astonished if at some point in time there weren't a cyclical decline in a secular bull market. And investors and speculators need to keep that in mind. They need to keep in mind that the baseline gold price in nominal dollars goes higher, but that they will experience volatility and cyclicality. And if you're not psychologically and financially prepared for that, you can participate in the greatest bull market in history and still conspire to lose money.
That's a good point. Rick, silver as well. I like your views on silver, by the way, but can green demand alone sustain, let's say, a $60 breakout for silver, or do we need depth fireworks?
I think you need a continuation in the underlying momentum in gold. I believe that the silver market's a derivative of the gold market. And I believe that the increase in the gold price justifies the gold narrative. It calls to investors' attention the underlying strains in fiat currency and fiat currency denominated instruments. When the generalist investor comes into the precious metal space, and we're just beginning to see that now, when that happens, in my experience, market leadership changes from gold to silver. Silver is generally more volatile than gold, so a 5% decline in the gold price could yield a 7 or 8 or 10% decline in the silver price. But silver is more volatile to the upside, too, in a precious metals bull market. And by the way, I don't know why the market reacts the way it does. I just know that it reacts the way it does. My suspicion is that when the precious metals narrative becomes attracted to the generalist investor, that the lower unit price of silver and silver's reputation for volatility is what generates its outperformance. If you look at the relative performance of the two metals over the last 5 or 6 weeks, it may be that we are at that inflection point today where silver begins to outperform by historical margins of 2 to 1 the increase in the gold price. I don't know if we're there, but you won't need me to tell you.
Yes, of course.
When we really break out, it'll be very obvious.
Definitely. Yeah, silver is a wild metal. I like to call it wild metal because it spikes like maybe like uranium sometimes. By the way, speaking of uranium, uranium nuclear AI hype drove spot to, I believe, 84 bucks last month. Now it's around 76. Facing double demand by 2040, do you believe, does it crush gold as silver returns or get stalled by the red tape? I mean, uranium.
I'm a 5-year, 6-year, 7-year uranium bull. The market is amply supplied with uranium now. There is liquidity in the uranium market. What there isn't is solvency. $75 a pound is very obviously not a price that brings a lot of new supply on the market. You are seeing shut down mines, Cameco's mines as an example, but more prominently Kazatomprom's mines, not returning to production. You're seeing that partially because of technical problems and partially because $75 is not sufficient incentive. What people fail to realize when they look slavishly at the spot market is, I think, 3 things. The first is that the volumes on the spot market are anemic. Most days there's more trading volume in the Sprott Physical Uranium Trust than there is in the spot market, which suggests that the spot market has become the spot market. The second thing is that more and more uranium is being traded off the spot market in the term or contract market, and this is extremely important. It's challenging because a lot of companies don't report their term contracts. So you don't know what price the uranium is getting traded at, and you don't know the prices and volumes specified in the future, which is to say the real structure of the uranium market is hidden from investor perception.
Yeah.
That's very, very, very important. The second thing is that while AI is what has the market excited, the reality is very different. The future may very well be AI. But when you talk about the future at an 8% discount or 10% discount in terms of net present value, any cash flow you enjoy 10 years from now doesn't matter on a net present value basis. What matters is the pace of restarts, particularly Japanese restarts, and the pace of new builds, particularly Chinese new builds. That's what matters in time frames that matter to investors on a net present value basis. And by that, the future's extraordinarily bright. We are building nuclear capacity at a breakneck pace, irrespective of AI.
Yeah.
And probably of equal importance, a whole bunch of plants, but particularly in Europe and the United States, that were slated for shutdown, that whose consumption was not included in their demand forecasts, has had their shutdown postponed, which means that $500,000 or £500,000 of demand that was slated to go to demand heaven
Yeah.
is still constituting demand.
That's a good point again, Rick. Let's jump to the stocks, the companies. I have
Sure.
10 companies on the list for uranium, for gold and silver. And just disclaimer for our viewers, of course, everything you say here, it's your view, it's your current view. It can change tomorrow or the day after that. So I will ask you.
Probably
Yeah,
something more important to say. The valuable part of this interview is the education.
sure.
The stock part is entertainment. I handle stock questions because I can use every stock to teach a lesson. But there are so many variables, both in terms of what the company might do, but also in terms of investors' needs and tolerance, that while the stock selection part is entertainment, I get it. People need to use it as education because so much can change so quickly. And so much of the value of an individual stock pick has to do with individuals' needs, wants, and tolerances. That I really, I really think that the viewer needs to look at it as an entertainment function.
Agreed. With that said, Rick, let's start with Cameco, with the giant, Canadian giant. What's your take
Someone,
on Cameco right now?
someone with a someone with a 5-year outlook would have to explain to me why they didn't own Cameco. Cameco is the 800-pound gorilla in a market that is slated for secular growth for the rest of my life, probably the rest of yours.
Yeah.
It's difficult to understand why somebody wouldn't own Cameco.
Yeah. Rick, another giant, Kazatomprom, pros and cons of the Kazakh low-cost leader.
Kazatomprom is more challenging. It was my favorite based on fundamentals 5 years ago. And in terms of geological fundamentals, it's still my favorite, but I don't own it anymore. I don't know very much about internal Kazakh politics. I'm attracted to the country because it's made me money and has great geology. But the exodus of middle managers from Kazatomprom, many of whom I came to know 10 years ago and have a high regard for, the fact that these very, very, very promising young geoscientists have left Kazatomprom in an economy that doesn't have many jobs as good as Kazatomprom has me worried about Kazatomprom. And if there are risk factors that I don't understand, I exit the stock.
Understand. NextGen, that is something I want to hear from you. What's your take on NextGen? And do you believe that they will produce by 2032? And what's your take on their F1 sponsorship?
I think the F1 sponsorship is idiocy. I think the financial public relations spend is insane. Insane. With this most recent financing, I think it's pretty clear that the future is in their control. They have raised high cost capital with these convertible preferreds for years. And I think part of that high cost capital, frankly, is ensuring voting control by the management team. Usually these financings come with explicit control of the resulting vote. But I also believe that this is easily the best undeveloped uranium deposit on the planet. They have been, I think, smart in 5 or 6 years, not trying to make the deposit bigger because it's already big enough.
Yeah.
But the exploration upside around this deposit is monstrous. I own NextGen, despite the fact that I think they flat out waste $5, $6, $10 million a year. I own it because it isn't very often that you have the ability in public markets to own the single best undeveloped asset in the planet in any given commodity. I also own it because of the change in structure in the uranium business, which is to say the advent of the term market. 15 years ago, NextGen would not have been able to build this deposit because they would not have been able to attract the financing. Now, NextGen, particularly because of their physical uranium holdings, can enter into term contracts with investment-grade counterparties for periods of time as long as 30 years, but at least long enough to amortize the construction loan. And they can enter into these contracts with people like Tokyo Electric, China General Nuclear, Duke Power, Southern companies, real takers. And they can literally take these contracts to the bank, which means that NextGen might sell the deposit, but they don't need to sell the deposit. The fact that they don't need to sell the deposit lends competitive tension to the takeover process. One could say, with Canadian politics the way they are, that NextGen 10 years ago would have had to sell to Cameco because the Canadian government would not have allowed the deposit to be sold to foreign buyers. It's arguable with the participation of both Rio and BHP and with the new Anglo-Teck merger that there are 4 potential bidders now. But importantly, NextGen itself is a potential bidder, given the fact that the term market would, in the right set of circumstances, enable them to finance and build this mine themselves. That's important. For that reason, irrespective of idiotic financial public relations expenditures, I still own the stock.
Fair enough. You mentioned BHP. BHP as a diversified powerhouse with Olympic Dam. Pros are like probably balance sheet strengths and cons are probably the uranium miner role, right?
Well, BHP would be an interesting candidate to take them over, given that BHP could conceivably pre-sell pounds from Olympic Dam, byproduct pounds. And BHP, without trying, becomes an important uranium supplier. If you are a purchaser from China General Nuclear, if your job is to ensure supply of uranium to China Inc., by contracting with BHP is not a career-threatening job. Contracting with a smaller company, if there's a hiccup, your superiors say that you either knew or should have known that what you're doing was foolhardy and stupid. And so in that regard, I would suspect that for sovereign buyers, their choice of suppliers may be Cameco and BHP in League 1, Kazatomprom in League 2, and the whole rest of the world unacceptable.
Definitely. Rick, next one is Paladin Energy. You know Paladin very well. We all know this brilliant stories, 10 cents to 1 cent to heaven levels. Pros and cons on Langer Heinrich restart ramp to 6 million.
The cons are that Langer Heinrich is highly unlikely to be in the lowest cost quartile worldwide. It is, because of its size and the sort of hot restart, likely to be in the highest return on capital employed quartile worldwide. So it meets two of my criterion. One is size. It's a relevant deposit. By that I mean small mines have all the risks that big mines do, but small mines can only ever make you small money. If you're going to take big risks, you may as well make big money. And Langer Heinrich misses that. What it doesn't miss is materiality around cost. It will never be, I suspect, in the best cost quartile worldwide. What attracts me to Paladin is the whole development pipeline in Paladin, and the fact that Paladin will be, I think, a prime beneficiary of the market's move to term contracts. Their ability to finance these mines into production with certainty around the ability of Paladin to sell specified amounts of pounds at specified prices over time. I suspect that Paladin will enjoy, as a consequence of these contracts, costs of capital that are 350 or 400 or 450 basis points lower than would be faced by a gold developer or a copper developer or a coal developer. The fact that you can lock in production volumes and prices for a 20-year or 30-year term is a factor that the entire market is overlooking around uranium. And it's probably the critical structural change in that market. And Paladin is prime beneficiary.
Yes. Rick, Denison Mines, do you own it? And especially, I want to hear your take on Wheeler River. Do you see approval drags ahead for the Wheeler River?
Wheeler River will be approved. I own Denison. Let's get that out of the way. Denison has a wonderful database, which is worth an awful lot. People don't understand the fact that Denison has been a worldwide explorer for a very long time. And there are probably 10 mines in its files.
Yeah.
I am concerned about ISR recoveries at depth. The company talks about all their bench scale tests and stuff like that. I know from experience that there is a huge, huge, huge change from bench scale to commercial scale. I own it personally, thinking that it may take a couple of years to work out, which is to say, after they've achieved what's called financial completion, before or if the mine works, may take 2 or 3 years to find out. If it works, the upside's spectacular. This really, truly changes the game. My gut feeling is, if it works, it's going to be lumpy. It's not going to work right away. For that reason, I don't recommend it to people who are uranium investors and speculators, because I don't think that they have the psychological durability to stand 2 years of bad news releases. I witnessed Equinox recently having 18 months of bad news releases, and I watched people get shaken out because they read the headline in the news release. They didn't read the news release. So for that reason, I don't talk about Denison very much. I'm cognizant of the risk. If I lose half the money I have invested in Denison, it'll be a minor irritant, but it won't change my decision as to what to have for breakfast. Other speculators are built differently than I, and so I don't talk much about Denison.
Yeah, agreed with everything you said. With Denison, I believe that the people are not recognizing the other part of their portfolio. They have massive portfolio actually with the exploration and development projects.
Correct.
And the mill and the co-ownership in the mill. But it's not
The
priced, maybe it's not fully priced.
the permitted mill and tailings really gives them the ability going forward to, as an example, do deals on stranded assets that other people have.
Yeah.
That's a big deal. It's a really big deal.
Yeah.
And they also have, I think, an underappreciated depth of management knowledge and expertise. The human capital Now, I remember from Kazatomprom, sadly, that human capital can depart. I have a bitter experience with that personally.
That's right, Rick. Let's move on. Of course, on every list I have UEC, Amir Adnani. I remember in one of our prior interviews you said it is maybe was at the time overvalued. What's your take now?
UEC is priced for perfection, and I have to say they've been delivering perception. On a net present value basis, if you were using a 10% discount on UEC's free cash flow for the next 5 years, they are way overpriced. If you look at that collection of assets and the unusual skill that the management team has to monetize and finance those assets, the situation changes. UEC is likely the proxy name, the go-to name worldwide for the U.S. uranium business. The U.S. will never be anything remotely resembling a low-cost producer. That's not the way it is. UEC's deposits will never inhabit that lowest cost quartile. But the politics in the United States have changed. During the Biden administration, uranium speculators like me, or uranium developers like Amir, ran some risk of having their picture on a post office wall on the most wanted list. Now, the morons in Congress want to subsidize us.
Yeah.
I have to say, I felt purer when I was vilified than I do now when I'm subsidized. But a lot of return on capital employed in mining has to do with your cost of capital. And it's arguable that UEC's cost of capital, including contracts if they deign to enter into them, and the idiotic range of subsidies in the U.S., it's not unlikely that UEC's cost of capital goes sub-zero. It's important in that context to understand the significance of Scott Melby in that group. He knows as much about the structure of the uranium market as any living human being.
Agreed.
He also knows about the politics of uranium.
Mhm.
He has been an important Republican Party operative, in natural resource politics for 3 decades. He has a great sense of the ins and outs of both the Department of Energy and the Trump administration. And whether or not you agree that it should be important, I'm one who believes it shouldn't be. It is. And he is an unsung asset in that group in terms of permitting, in terms of finance, in terms of the domestic politics of uranium.
Definitely. Rick, energy fuels, do you think they are rewarded because of their shift to rare earths, or how do you believe that they should play the balance between uranium and rare earths?
I think they should do exactly what they're doing, which is to say, be opportunistic. There's huge value in 60 million tons of permitted tailings. You don't have to go through the permitting process because it's permitted. You don't have to permit the mill because it's permitted. The idea that the extraction technology that is appropriate in particularly the uranium waste part of their business is also hyper appropriate to the rare earths business. And the fact that they have an existing operating permitted facility is uniquely valuable. The company's management team has done an exemplary job too of managing the future of both businesses simultaneously. And I would say they've done a remarkable job of managing the expectations of both Wall Street and Washington.
Yeah.
Again, on a net present value basis, if you look at the value of the free cash flow that they might be expected to generate in the next 5 years, they're hopelessly overpriced. If you look at them as a call option on the future of rare earths in the Western world supply chain and the uranium business, the nuclear power business, particularly in the U.S. 5 years out, and you understand the standing start that they have by being in operation with a permitted facility with retrieval processes that don't need to be broken in because they were broken in 20 years ago and permitted tailings, then the circumstance becomes very different.
Yeah. Uh, Next on the list is UR Energy from Wyoming. What's your take on them? I know it's not a big mine, however, it's not
Yeah,
a big operation, but do you have their?
I think money will be made in the stock. I don't own it.
Mhm.
I have a prejudice against smaller mines. I do think money will be made in the stock. I think they've done a great job managing the politics and the bureaucracy in Wyoming. I think Wyoming is probably unique in the United States in that it may be the best jurisdiction
Agreed.
for mining in the United States. Uh, at the politics of Wyoming are solidly in favor of resource development. What many people don't understand is that the state also already has regulatory capacity in uranium. They don't need to develop the expertise among the state regulators around uranium because they already have it. And the fact that they can regulate from knowledge as opposed to from ignorance means that many of the regulatory roadblocks that would come from timid regulators, regulators who are timid because they don't understand what they're regulating, you don't have that risk in Wyoming.
Yeah.
They've been in the business for a long time. When the inspectors come out, they know what they're looking at. They've seen it.
Yeah, totally. Wyoming is the best place to be for uranium. Agreed on that. Final uranium name is enCore Energy. Do you own it?
I don't. I don't. Again, I have the. I mean, I like the people a lot, but I have the scale problem there.
Okay, okay. Rick, before we go to silver and gold companies, just one comment. There was a breaking news in the uranium space with Deep Yellow CEO departing. What's your take? Why did John left?
I owned that company largely because of John. I was the one who refinanced Deep Yellow when John took it out of the Paladin orbit, and I owned it because of John Borshoff. I am no longer a shareholder of Deep Yellow. I don't know anything about the corporate intrigue behind it. I just know that John isn't the type of person who would make a decision to retire overnight.
Yeah.
I don't know what happened, but I know what didn't happen. And what didn't happen is that departure was voluntary. Given that my reasons for owning Deep Yellow were around John Borshoff, in the immediate aftermath of that press release, which I had no idea was coming, I became an ex-shareholder.
Okay. Thanks for clarifying this. Rick, let's move to silver. Maybe first we will cover Fresnillo. Mexico output king at 55 million ounces per year. What pros and cons stand out here?
Well, Fresnillo is arguably, in many senses, the best silver mine on the planet. You'll notice that 44% of a part of that deposit, controlled by MAG, just sold to Pan American for $2 billion. It tells you something about what the rest of the complex is worth. uh, if you're a real silver investor, you probably can't not own Fresnillo. It exposes you to real political risk around Mexico, but also political risk around the reported enmity of Mexico's president with the families that control both Peñoles and Fresnillo. Politics is sometimes personal. And if that happens in Mexico, there are political risks that are greater than the general and political risks associated with operating in West Mexico.
Okay, let's move to Wheaton Precious Metals. What's your take?
Very difficult to understand why somebody wouldn't own Wheaton. Extremely well run, honestly run, low G&A relative to cash flow, legacy assets, great transactional skills, and Randy Smallwood is a competent and honest and good human being. And he's young enough that I suspect he'll be there for some time. It is, from my point of view, one of the three must-own precious metal stocks on the planet. And it's very difficult for me to understand why somebody wouldn't own it.
Fair enough. Next one on the list is Pan American Silver. Post MAG acquisitions portfolio scale versus 2 billion debt load. What's your take?
Uh, they paid a full price for a great asset. great exploration upside, which they haven't paid attention to, shaking the thing in. But Pan American really is a leverage to commodity price and operational story. They bought a bunch of assets from Yamana that had been starved for cash by Yamana, and allowing some of that cash to go back into sustaining capital and new project investment brings down their all-in sustaining costs and extends their reserve life. People point out that Pan American has gone a long way in price, but the way that it's come in price is dwarfed by the increasing margin that they get from higher precious metals prices. If you can afford to take operating risk, then I think you have to own Pan American. Don't own Pan American primarily as a silver name because it's primarily a gold name, but it is a company that benefits from shifting expectations around silver because the market still regards Pan American as a silver stock.
Okay. If I recall, you were very bullish on Hecla Mining. What do you think of them today?
I was bullish about Hecla because I was bullish about the market moving towards silver.
Mm-hmm.
I didn't own Hecla as a consequence of my feeling that it was the finest silver play on the planet. I regarded it as a fairly high cost producer that would benefit from margin expansion. So I owned Hecla as a speculation. The share price performance that I've gotten out of Hecla and enCore in the last 2 years has been mind numbing. The consequence of that is that I own about half as much as I used to. The reasons why I own it came to be true, and the price expectation I had for it was exceeded.
Yeah.
So I haven't sold it as a consequence of any management fault. I've sold it because I rebalance through a bull market to quality.
Okay. Next one, First Majestic.
First Majestic looks like a turnaround story. They're doing a great job at Hermosillo. And an unsung job, I think, understanding the upside potential in San Dimas. People haven't paid attention to it because the mine's been producing for 400 years. uh, Obviously, I would like to see Jarrett Canyon resolve itself. Uh, First Majestic, again, doesn't occupy that part of my portfolio that I have reserved for companies that operate in the lowest cost quartile worldwide. Mm-hmm. I own it because that company is extremely leveraged to perception around silver, but also because they have a demonstrated expertise with one failure in buying mines that have been neglected or milked and tuning up those mines, investing enough money in them to get them at operating at their potential. San Dimas being a classic example. First Majestic is another one where I have been stupidly rewarded in the last couple of years. I don't mean rewarded, I mean insanely rewarded. The consequence of that is that I own half as much First Majestic as I owned 2 years ago. They will be invited back to the Natural Resources Investment Symposium because I do own them. Keith Neumeyer has invested now over $100 million in financial public relations. By the way, never sponsoring Formula One. And the consequence of that is that he's built 100 or 120,000 person constituency around First Majestic. And those buyers are very, very, very geared to the silver narrative. That's something that probably, like Hecla and Coeur d'Alene, or Coeur Mining now, gives them extra torque in a silver bull market.
Yeah. A group of people that I highly respect are the people behind Vizsla Silver. I own big chunk of Vizsla. What's your take?
Vizsla is one of the two must-own silver explorers, I think. At both Vizsla and Abra, you have a circumstance where you absolutely positively will have a mine. The question is how big. In both cases, but particularly with Vizsla, I would say that they understand enough about the mineralogy that the exploration program has become predictive.
Mm-hmm.
And in my life, when the explorers come to understand the genesis of the deposit, you have a sort of a fulcrum point where you begin to add ounces more quickly and more cheaply than in the past. And I think you're there with Vizsla.
Yeah. Endeavour Silver is next on the list.
I don't own Endeavour. It's a collection of smaller mines. It has great torque to silver, but you know my prejudice against small mines. I would rather own larger pieces of high quality deposits relative to having a plethora of lower quality deposits. So I don't own Endeavour.
Okay, let's talk Dolly Varden. Sorry.
Dolly Varden's interesting. I would suggest likely fully priced based on the existing assets. But those existing assets are wide open. And if the two deposits connect, they're clearly part of the same mineralizing event, then all bets are off. I own it. I have sold enough that I have taken my money off the table. That is substantially less than half of my position. It didn't take very much by way of selling to recoup my cost. I have a high regard for Sean Kun, the CEO. Uh, as I say, it's done extraordinarily well in terms of price, and what you're looking to now is exploration upside.
Yeah, is there any other silver company that you are particularly bullish on, or you like the story that we didn't mention here?
Well, I think real silver investors need to look at Peñoles, the controlling shareholder in Fresnillo, and they need to look at Buenaventura. You can't really be a silver investor without being involved in Mexico or Peru. Uh, a lot of people, I guess, are fair weather silver investors, which is to say they want to be invested in silver in a location that they feel comfortable with. What that means is that they confine themselves to the small, high cost ghetto, which is something that I personally refuse to do. I pointed out Abra Silver. I'm also a fairly large shareholder of Aya Silver.
Yeah.
Recent distribution of the short report gave me a wonderful opportunity to buy more at a discount. We were fortunate enough to interview Benoit LaSalle, the CEO, at the Rule Classroom right after that short report came out. He courageously said, I'd love to talk about that report. I'm not hiding from this. He, I think, made a fairly persuasive case on my broadcast that report was perhaps mean spirited, but certainly in many areas erroneous. And so I still own Aya, with the
I
caveat that in the run up that we've enjoyed in the last 2 years, I've sold enough that I no longer have any net cost in that position.
Okay. Rick, let's move to gold stocks. We'll start with the biggest ones, maybe Newmont.
Newmont's a turnaround story. What I hope to see, I probably won't see, with the departure of their CEO and Barrick's CEO, a merger between Newmont and Barrick would be the gold market merger made in heaven. It's such a good idea, it probably won't happen. Uh, I own some Newmont. Again, I own precisely half as much as I owned 18 months ago because the market has rewarded the turnaround that I began to see as a consequence of the disposition of their tier two assets. I think that turnaround has a lot further to go. I don't think of Newmont in the same context that I think of Franco or Wheaton or Agnico Eagle, which is to say a best of the best gold. But I do believe that Newmont and Barrick are in the category that I would call the best of the rest. We're in the part of the market now where the best of the rest, ironically, because of margin expansion, performs in the market better than the best of the best. That's what happens in a bull market.
Yeah, you mentioned Barrick. What's your take on Barrick, especially the Africa tax part? What's your take here?
If you're going to be a low cost gold producer, you have to be in Africa. You have to take the political risk. And Barrick maybe has not managed those risks as well as they had. There's a lot of, uh, how would you say? There's a lot of suggestion in the market that in the Randgold days, some of those assets were acquired in a manner that precludes Barrick being able to contest them too well. I don't know whether that's true or not. I know that other companies, B2 among them, have been able to handle the situation in Mali in a different way than Barrick did. Perhaps it's the size of the prize. I don't know. But I also think that those difficulties are overstated in the context of the share price. The Barrick share price, the Barrick performance, like the Newmont performance, has everything to do with Northern Nevada, and the rest of the world is primarily an afterthought.
Yeah. Let's talk Agnico Eagle, maybe.
Best of the best. Uh, very difficult for me to understand why gold portfolios would not include Franco, Wheaton, and Agnico Eagle. Growth built in, insane margins, truly insane margins. The upside has less to do with developing new assets as increasing the throughput in their existing assets, which is to say that the growth for 5 years is built in for brownfield expansion. Tough to find something wrong. Amar Al-Jundi has been a consistent guest at my conference. He has been very generous in terms of answering tough questions, not softball questions.